Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 30th of October, 2019. So welcome, everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so also just before we jump in, a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD Bank research page, which we update on a daily basis. And I believe you can find a lot of useful stuff here. So yep, feel free to check us out. But for now, guys, excuse me. But for now, let's jump into the charts. Now, the first one I wanted to touch on, and that's going to be the DAX, so the German index. So we had a good run recently. You can see that it's currently trading above this little tentative, short-term tentative upside support line taken from the low of the 15th of August. Excuse me. And for now, looking at this activity here, in a way, there is a possibility for this one to slide back down. The cash index is moving lower. We are seeing the cash index near the 12,900 zone, somewhere around there right now. So, in a way, the index seems to be showing some signs of a potential maybe correction. But again, anything low, moving lower, we will class that as a correction as long as it stays above the 21 EMA here on the 4-hour chart. So if it stays there, there is still a chance for this one to reverse back to the upside and push higher. For those who are more on the cautious side, probably just wait for a push above the highs of this week, the current highs of this week, which are around the 12,986 territory, so approximately around here, guys. So if we get a push above that, this would confirm a forthcoming higher high, and we could then target higher areas. And by higher areas, I mean, and let me just jump into a daily chart here, I mean going towards the 13,204 territory, around there somewhere, which is marked by the high of the 22nd of May, or in other words, the highest point of May 2018. So that's basically where we are right now. So the index, of course, hit its new high for this year this week. So on Monday, and but again, looking at this picture here, in a way there is a possibility to see maybe a bit of a correction back down. And as I said, looking at the 4-hour chart, if this decides to correct a little bit lower but still remains above the 21 EMA, or at least 21 EMA on the 4-hour chart, or at least above the 12,815 territory, if it stays above there, then we will continue aiming to the upside. But if it starts dropping here lower and we see a slide below the 12,700 zone, then, well, I mean, there could be a possibility to see maybe this one drifting further down, maybe going and testing the 12,604 territory then. But if that fails, then yep, it could be opening the path towards this, towards a possible retest of this upside support line. But again, guys, basically, if I'll put a few arrows here for now, this is the idea that we're keeping in mind. So we may see a bit of a correction here, but if it stalls around here near the 21 EMA and pushes higher and breaks above the 12,986 zone, then yep, we will aim for higher levels, and we'll aim for that 13,200 zone that I was talking about earlier. So, but if it starts sliding below the 12,700 and around 700 zone here, then yep, this could increase the chances chances of a further decline here up until this upside support line. So we'll keep an eye on this one. Let me just also put an arrow here for our future reference. Basically, something like this could be possible. Gold. I've looked at this one yesterday, and basically, initially this last yesterday in the morning, I called this level here. I was telling you guys to keep a close eye on it, the 1490 zone. So it drifted lower, it moved lower fantastically here, but now it's correcting back to the upside. And yesterday in my trader's tea time, I also mentioned this possible correction here up until this 1490 zone. So this is what I was saying, that if this 1490 continues to hold, if it holds as a nice area of resistance here this time, so we may see another round of selling, which could potentially lead towards the 1475 area. Now, this is the strong level that we're keeping a close eye on. It would be quite nice maybe to see a test of this area, but for now, given that it started retracing, correcting a little bit here to the upside, all eyes are on the 1490. If it gets broken, then yes, this could in a way push a little bit higher, but of course we'll still keep an eye on the upper side of the falling wedge formation here. Oh, sorry, falling channel formation here, and this area could provide some strong area, some strong resistance, because not only that we do have the upper side of the falling channel, but also we have all the EMAs here. So in a way, this area could be an interesting one for some resistance, but again, that's in the scenario if we get a push above the 1490, because if the 1490 continues to hold, we're still targeting the downside in the near term here, the 1475 zone. That's what we're aiming for. But in that scenario, if we get a push above this, the kind of the last resort for the bears to step in here could be around this territory. So but if it starts pushing, let's say again above the upper side of the channel and makes a climb above the psychological 1500 level, now we will start considering slightly higher levels, but we'll have a very tight stop loss, because again, you see this is what happened here as well. So we did have a nice push higher. It traveled all the way to the upside, but kind of failed to break above our main level that we're watching here is the 1520. If we get a push above this, then yep, we will get a little bit more comfortable with the upside. But as you can see, last time on Friday, last week, it did travel higher. It almost managed to reach this area, but then reversed quickly to the downside, and on Monday continued sliding here back down. So that's why I'm saying, guys, if we get a push above the 1500 level, then yes, we will carefully aim for the upside, but we will have a very tight stop loss just in case this does the same trick here and reverses sharply, and so it wouldn't take you out basically. So so keep your eyes on this one, guys. AUDJPY. So I've looked at this one yesterday as well, and I still wanted to show you, and we didn't have a move this night, well, during the Asian session here, so probably still waiting for that trigger that could push it either to the upside here or to the downside. But what I was saying yesterday, that of course what we're having here ourselves is well, I wouldn't say it's a triangle. It's not really. I mean, you cannot really class that as a triangle, but it's trading above this little tentative upside support line, which is a positive thing for AUDJPY. But the only thing is, for us to get comfortable here with higher levels, a push above this 74.83 level is required. So if we get a push above that, then yep, this would confirm a forthcoming higher high, and we could target the 75.200 level, or even the 75.59 zone. So again, guys, for now, keep your eyes on those. It's a very interesting setup here. It would be interesting to see if we would get a nice pop here to the upside. If it doesn't pop, and let's say if we get a scenario where it does break it a little bit, but then let's say the 4-hour candle quickly gets back towards the downside. Now this would be a bit of a red alert, I would say, because then we'll keep an eye on this upside line and this level right here near the 74.31 zone, because if it starts dropping below this, then we will start looking at Slightly lower levels, we'll aim for the 73.91 zone or even this 200 EMA on the 4-hour chart. Of course, don't get me wrong, we still could continue drifting lower, and this is where our target here is near the upside line here. But for now, let's keep it short and simple. Basically, for now, everything's looking quite positive, but we need that confirmation break here above the 74.83 first before examining higher levels. In terms of the downside, again, the 74.31 level, that's going to be our kind of barrier to watch if it suddenly, let's say, starts sliding to the downside. This is where we could become a little bit more comfortable. NZDJPY, slightly different picture here. So I just wanted to quickly show you. This was something that we've posted. That we've posted on our TradingView account here on around the 17th of October. So it worked out nicely. We managed to hit our target, and now we can actually get rid of this. Then after we managed to hit our target, you can see that it overshot it a little bit and then kind of quickly came back down. So how we're going to play this one out right now is, of course, I do understand that on AUDJPY we are quite bullish, or I wouldn't say somewhat bullish, but on this one it's a slightly different picture. I mean, if you look at AUDNZD is exploding to the upside. So basically we're having ourselves a weaker New Zealand dollar. So in here in this scenario, we're going to remain probably neutral, but if we start seeing a drop below the 69 level here, then well, we will start considering slightly lower levels, but again, we will keep the downside limited due to this upside support line. A bit of a tentative one, but nevertheless, we'll keep that in mind. The one that's taken from the low of the 2nd of October, and then we'll take it from there, see what he wants to do after. If it wants to hold around here and rebound, then yep, wonderful for the bulls. But if it starts breaking, then yep, further declines are possible. But again, that's a little bit too far. For now, let's keep an eye on this level right here, the 69 zone. If we start seeing a drop below this, be very careful because again, as you can see here on Friday and on Monday, we also did have those little drops here, but neither of the 4-hour candles managed to close below this. So in a way, how you could play this one out is if you start seeing a nice, or if you see a close below of a 4-hour candle below this 69 zone, it increases the chances of a further drift lower. Don't get me wrong, we could also always reverse back to the upside again. We've seen that happening many times, so that's why we do have a stop loss in place always. So but if it starts drifting here further, and if first of all, if we see this close of a 4-hour candle below the 69 zone, and then you can see that it continues to drift lower, then yep, it increases the chances of a further move towards the 200 EMA on the 4-hour chart, or even this upside support line. So that's what we're going to be aiming for in case we get a drop below the 69 area. In terms of the upside here on this one, now this is the level to watch basically. So if we get a push above the 69.47, in a way that could attract more buyers here, and the pair could in a way travel further north. The only thing is that we'll be very careful with further upside, and we will only aim for the 69.97, 95, 96 territory, which is the current highest point, or in general, probably it will end up being the highest point of October. So this level right here, that's where we're going to be aiming for if we get a push above the 69.47. We're not going to drag this one any further up because, well, we are always afraid of getting ourselves into a range or something. So in a way, if it stalls near this 69.95 zone, 96, then and drifts back down again, then yep, we could be getting ourselves something of a range here. But again, that's probably again getting ahead of ourselves too much. So That's why we're gonna target only this level first. Quick update on the USD CAD. So this is what I talked about yesterday, and basically what I was saying, that in order for us to aim for the upside, not only that we needed to see a push above the 21 EMA, which we got, and we also needed to push to get a move above the 1.3078 zone. So we also got that, and as you can see, the rate has retraced back down here, and now it kind of tested this barrier from above. So let's see if this barrier can provide good support, and if it can act as a strong area of support for today, from which the pair could reverse again and push to the upside. So that would be quite interesting to see, because you can see that the pair got stalled near the 50 EMA here on the 4-hour chart, and that's why for now, of course, it seems that there could be a bit of upside, even if it, let's say, drops here a little bit lower like this, but still, let's say, climbs back above its pivot. Then, yep, if it stays above its pivot today, then there is a possibility to see this one pushing further north here a little bit. So that's why I keep your eyes on this one, because again, for us, for the downside, I'll stick to the same idea. A drop below the 1.3036 is required, because this is what happened yesterday. It kind of failed to break below that, and then you can see that we had a nice push to the upside. So this level here kind of presents a good opportunity for the sellers to step in, and but again, we'll have to probably wait for this one for a while. For now, we are examining this little correction here before another possible move higher here. So again, for those who are more on the cautious side, in a way, what you could do is just wait this one out right now and see if it starts reversing back to the upside and starts breaking the highs of yesterday. And let me just put that one on the chart. And that was roughly around the 1.31 zone. If it starts pushing above that, then yep, aim for the slightly higher levels. GBP Aussie, also quick mentioning of this, and yesterday I've talked about this yesterday. Basically, I was telling you guys to keep a close eye on not only the descending triangle, but the falling wedge formation. So basically, the two are kind of well, the two are basically mean that the pair could break out in different directions, but for now, we're going to remain neutral. Overall, of course, this continues to trade above its upside support line here, taken from the low, this medium-term upside support line taken from the low of the 30th of July. But from the very short-term perspective, we're still stuck here. It's quite an interesting setup. Let's see which way this is going to pop out, because if it's going to respect the falling wedge formation, then for us, it could move higher here. It could break the upper bound, and if it breaks also the 1.8857 zone, then yep, we'll get comfortable with higher levels. But if it starts dropping lower here and drops again below the lower side of the descending triangle, and also drops below the lower side of the falling wedge, and this is where we'll still consider this a lower wedge, then yep, we will aim for the 200 EMA and the levels around it, which are around the 1.8515 zone or the 1.85 zone itself. So, but again, for now, it's probably the waiting game that we need to do. We need to play. Euro USD, also quick mentioning of this one. I talked about this yesterday, and basically what I was saying, that if we get a push above the 1.1103, that's good news for the buyers. The only thing is that the buyers should be very cautious near this little short-term downside resistance line taken from the high of the 18th of October, and then basically we'll take it from there. For now, yes, there is a possibility for this one to drift further north, but again, the upside could be limited due to this downside resistance line. If it fails, if it's just a little tentative line here that's going to be seen by the bulls, and if this is just seen as a temporary obstacle, for us to get comfortable with further moves higher, a push above the 1.1154, 55 zone could do the trick here, and we could then aim for these slightly higher levels. We'll aim for the high of the 18th of October, which is around the 1.1183, and then yep, we'll see from there if it wants to travel higher or not. In terms of the downside, we'll take a very conservative approach and wait for a drop below the 1.10, 63, 60 zone, roughly around there. and wait for a drop below the 200 EMA on the 4-hour chart, and only then target further declines here, and at least in the short run here. So that's why, guys, for now, keep your eyes on this this kind of this situation, let's put it that way, because again, like I said, yes, it is showing some positive signs, but again, the upside could be limited due to this downside resistance line. So keep your eyes on that one. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my traders tea time, as always, or should I say that's 14:15 GMT time. That's 14:15. So because we've moved our clocks now, so yep, that's 14:15 GMT. But yeah, guys, thank you very much for sticking around, and I hope you have a fantastic trading day. Stay safe, have your stop losses in place, and we'll pick up on some of these instruments again in my traders tea time later on today. So, yep, please join me. Thank you very much, and bye-bye.